Hey guys, welcome back to Snowball Investing. This is going to be the November Road to Retirement series, and it's been an absolutely insane couple of months. When I initially started this series, I was only planning to make an update once every couple of months, but so much has changed in the past month. The market's been absolutely flying that I had to make another update. If you're new to this channel or this series, what I do is walk you through my entire investment portfolio, being absolutely transparent about how it's performing, and take you on that journey of me reaching FIRE or early retirement. What I've created is a very simple spreadsheet that you see on the screen, where it has a list of all my investment vehicles, and I simply just track it over time. And I also include my spouse's investments as well, because we are still a team and we are planning on retiring together. So I think it's good to see the entire picture, and actually working with your spouse, there are ways and means of actually investing in more tax efficient ways and utilizing essentially what the government gives you in order to minimize your tax impact. So there have been some significant changes and events in the past month. The first obviously being the UK autumn budget, which released some somewhat significant changes that may impact the way I look at investing. And secondly, obviously, Trump has won the US election, which at the moment seems like it's very bullish for the market. I mean, just look at the price of Bitcoin. So as I walk through these numbers, I'm going to sort of reference some of those, especially the autumn budget changes and how that changes my thinking. If you are enjoying these videos, please like and subscribe, and also hit the notification bell because I do have other video series. It really helps the channel grow. I'm edging very close to that 1,000 subscriber milestone, so I'd appreciate your support. I did want to touch on the UK budget changes, and I'm sure you guys have seen many videos on YouTube that cover this in a lot more detail, but I do want to cover this at a very high level. Obviously, the first change was the national insurance contributions, which will increase by 1.2% to 15. At the minute, that has no immediate or direct impact on myself. Obviously, that may impact companies in terms of potential reducing headcount, or for myself, it could be a potential impact on the bonuses I get from my workplace. But from that side of things, I don't think there's a significant impact. The second is changes to capital gain tax, which pretty much kicked in as soon as we found out the UK budget. And since I'm a higher rate taxpayer, so the capital gains actually will increase from 20 to 24%. And that has impact on how I'm going to look at my investments, especially ones in the general investment account, as they're subject to capital gains tax. The probably most significant change is around inheritance tax. So from 2027, inheritance tax will apply to pension wealth that is transferable at death. So before these changes, if you had a pension and you died, when you pass it to their children, that was free of inheritance tax. Obviously, any money they take from that may be subject to income tax. And that was a great way of transferring wealth to your children, but that is now no longer the case. You're probably asking, why am I asking about inheritance tax, given I'm probably around 15 years from retirement and hopefully a very, very long time away from death, or one would hope. But I think it's something I want to start thinking about quite early on. Where do I want to put my money so obviously I can have a good retirement where I've got a large sum of money, but I do want to leave a good chunk of that to my children in the future. So just starting to think about this now, I think, will be beneficial. And as I walk through my investments, I'll sort of touch on my thinking around this. So let's start looking at some of these numbers for this month. And I guess for context, the last update was on the 24th of October, and you can check out my previous video on that. So this is this month's update, and I pull these numbers around the 16th of November. And I've also made a few tweaks to this spreadsheet based on some feedback I've got. So I've got the total value of all my investments. I've tried my best to kind of calculate the unrealized gains across all of those, just to kind of give me and you guys a bit of context around, how much profit am I, or unrealized gains have I made across all those investment vehicles. And I've also split out the pension between myself, which is row 2, and my spouse, which is row 3. A good place to probably start off is my pension. So obviously I've split this out. So the value of my pension last month was 141,487. And this month it's 145,946. So that's a 3% change since last month. And doing some calculations, the unrealized gains I've made is £45,051. Just to be clear, that £45,000 is excluding any contributions from my employer. So I guess for context, if you weren't aware, I was putting 6% of my salary every single month, and the employer matches 12% on top of that, which is pretty good for pretty much any company in the UK. In the past couple of months, I did change that to 8%, where the employer still puts in 12%. So that's the maximum they'll put in if I put in 6%. And I was, partially doing that because pensions for me are the most tax efficient way to invest my money. And that's because I get 40% tax relief on any money I put in as a high rate tax earner. So yeah, I increased it to 8% because it made sense. One of the other reasons I increased it to 8%, and I could have increased it even more, was the whole thing around inheritance tax. So if I got a ridiculous large pension and I didn't use it, that's fine. As soon as I die, I can pass that inheritance tax free to my children. That's no longer the case because the pension is inside of your estate. So for me, it made sense to kind of just dial that back to 6% to what I had before, and I still maximize what I get from my employer. There are a lot of numbers and calculations behind working out the tax implications, and I'll be honest, I'm not an expert at this and I'm still learning as I go along. For example, if the tax relief I get on the way in is the tax I pay on the way out to the pension, how much benefit am I actually getting, especially if I max out that tax-free cash that you get as part of the pension. Does it make more sense to put it on ISA, for example? But for the time being, I've just pulled that pension contribution back to 6%. So I'm still getting the maximum my employer will give, which is 12%. So it's kind of a no-brainer, as it's in essence free money from my employer. Next up, we have my spouse's ISA, which went up from 15,802 to 18,319. So that's a 16% increase, and a total unrealized gains of £2,478. As you can see, there is a significant difference between my pension and my spouse's. Two main reasons for that. One, I earn more, and number two, her employer contribution match for pension isn't as great. She puts in a certain amount percentage, and her company matches that. With me, as I said, I put in 6%, and the company puts in 12%. And obviously, that has had a great compounding effect over the last 10 years or so that I've been investing into my pension. Next up, we have my free trade ISA. So this has been the most significant increase in the past month, and probably have to partly thank Trump for that. So last month, the value of the ISA was 151,867. And this month, just in a matter of about 3 to 4 weeks, it's gone up to £211,103. That's up a massive 39%. And my total unrealized gains in my ISA, which are thankfully tax-free, is £139,441. And you're probably thinking, what the hell has happened in that portfolio for such a big increase? I can basically show you, but the answer is two stocks, or two words, which is number one, Palantir, and number two, Rocket Lab. So in the past month, those two stocks have absolutely exploded. So Palantir now is up 454%. So the total value is 118,285. And Rocket Lab is up even more than Palantir, which is a bit insane, which is 489,000. And the total value of that is £20,376. I don't want to go into this video why I think they've absolutely shot up. I've got a separate video series on that. So make sure you hit that notification bell, because I will be releasing a video next week on my thoughts on the market, and I'm going to go through all of these individual stocks and why I think they performed the way they are. But yeah, it's been a very, very good month, and probably the best one since I started investing in individual stocks, which was essentially just only a couple of years ago. The one thing I am keeping in mind is that balance between the pension and the ISA. Historically, ISAs were kind of generally used to kind of fill that gap between when you retire and when you can pull money from the pension, Although, I've been quite lucky in my picks, so I'm personally thinking, well, actually, if I can outperform the market in my ISA, does that counteract the potential tax benefits of the pension? I'm not sure, and there's a bit of luck involved there, but the one thing I'm trying to do is balance my pension and my ISA, so I'm flexible, and you don't know what the government's going to do in the future. Are they going to tax on ISAs or reduce the limit of the ISAs, or you just don't know. So it's sometimes hard to prepare for something you don't know, but I'm just trying to spread the risk around somewhat. Next up, we have the two general investment accounts. So the first up, the free trade GIA. So that went up from 18,115 to 18,557. So that's just a moderate 2% increase. And my unrealized gains in the free trade ISA is 6,357, which is pretty good. My Vanguard general investment account, it went from 17,150 to 17,806. That went up 4%. I only have the S&P 500 there, so that's been performing well. And my unrealized gains in that GIA is £4,923. So I have decided I do want to start selling off my general investment accounts and reallocating that cash either in an ISA or a pension, and I haven't decided which one. But at the minute, the capital gains tax-free allowance is £3,000. So what I'm planning on doing on every tax year is selling enough stocks to hit that limit, and then redeploy that cash in an ISA or a pension, and continue to do that over the next couple of years till I empty my GIAs out, and redeploy my other vehicles. And just for a bit of context, I did open these GIAs during the COVID crash, so I did max out my ISA, and I still wanted to buy individual stocks. So I bought the GIAs, and actually it turned out to be a good decision, but I think it's time to now move away from that and use more tax-efficient vehicles. Next up, we have my work shares, and interestingly, it did go down the past couple of weeks. So it went from 19,327 to 17,950, which is down 7%. But I do get a discount on these, and at the minute, the unrealized gains are 8,189, which is quite nice. And I'm slowly accumulating over time, but bearing in mind, I try not to have too much concentration risk where I've got a lot of money in a particular stock, unless I've got crazy conviction in it, like Palantir, for example. Next up, we have crypto, and that's been, again, insane performance in the past couple of weeks. So last month, the value of my Coinbase account was 10,902, and now it's gone up to £15,012. So that's a 38% increase. That kind of nearly matches my ISA. My unrealized gains, it's quite tricky to work this out because Coinbase doesn't give you a very easy way to work it out, but I think roughly I've got around £7,352 in unrealized gains. My thinking around crypto was I just wanted a very small position in my overall portfolio in crypto. I'm just going to hold it probably for the next 15, 20 years. I mean, if it is huge one day, then, I've got a slice of that. And if it absolutely gets crap, it's not really going to affect me too much. Next up, we have my spouse's trading 212 ISA. So it went from 2337 to 2629. So that's a 12% increase. A very modest £170 in unrealized gains, but it is a small position and one we're slowly building up over time. Last but not least, we have my spouse's Vanguard ISA, and this is one she maxed out the last tax year. So last month it was 21,648. This month it's 22,131. That's a 2% increase and a total unrealized gains of £2,131. So what does that mean for the entire portfolio? So it went from 398,635 to 469,451. That's an 18% difference in just under a month, which is, if you ask me, pretty insane. Total unrealized gains of £216,092. Obviously, this type of performance isn't normal. I mean, we're just in a very bullish, enthusiastic market, and it's been a pretty good couple of years, to be honest. I was very fortunate to start investing during the kind of COVID crash, and I bought very heavily all throughout that, and that's paying dividends on the way out. But I don't know how long this rally is going to last. But regardless, I'm just continuing to invest every single month. Obviously, a large part of the gains are the contributions I put in, but also now I'm really starting to see the compounding snowball effect of these investments, especially when you get to the 100, 200, 300 plus thousand mark. I think it's really going to start to accelerate, and I'm very excited to see where this portfolio can go. Taking a look at the percent rule table at the bottom, taking a 4% of the total valuation, I currently have a 469. That will come out to around 18,778 per year that I could potentially pull out. But I'm leaning towards looking at more the 3% rule because it's a bit more conservative, and these are very high level guidelines, so don't base any major decisions on these, but it's just a good point of reference. So the 3% rule, that's £14,083. So it's, I can see it's kind of really increasing value, and actually it kind of helps me visualize what retirement could actually look like, how much money could I pull out every year. So it's just a good guide and reference for me. I'm really interested to see where this market's going to go in the next couple of months, in the next couple of years, especially under a Trump leadership. Everything is very bullish, enthusiastic at the market, but I am expecting a pullback at some point. I do have some cash on the sidelines that I'm ready to deploy. But again, those sort of tactics I discussed on my other video. But for this month, I'm going to leave it at that, and I'll catch you guys in the next month's update.